Okay, good afternoon guys. My name's Steve Ruffley. Welcome to this live trading clinic. So a bit of a bonus today. We're actually going to be trading over the US figures that are coming out at 5:30. So we've got the jobless claims and the quarter-on-quarter GDP. So should get a little bit of a reaction in the markets to these. So what we can do is we can trade some opinions over that data. Again, normal kind of trading clinic. Schedule is going to be as always, so I'll just go through the presentation just because we probably will do a live trade, so just to get that out of the way. So remember that spread betting exceeds your trading both carry a high level of risk or capital, resulting in losses that exceed your initial deposit. It may be suitable for everyone, so please ensure you fully understand the risks involved. Information and comments provided herein, under no circumstances have considered an offer or solicitation to invest. Nothing herein should be construed as investment advice. The information provided is believed to be accurate at the date the information is produced. Again, educational only guys, content of webinars, personal opinion of the moderator at knowingtrade.com. Content does not constitute financial investment or tax advice. Knowingtrade.com does not accept liability for the content of comments made during this session. So what we're going to cover, as always, some live charting analysis. We're going to focus on the euro dollar for a little bit. We've got some kind of key levels that we're trading around. It's been a bit up in the air at the minute, but I'll go through some technical, some fundamental thoughts that I have. Then we'll go through some multiple time frame trading. This is really the kind of bread and butter of how I present the markets to people and how I set up my charts. It's consistently profitable. Again, if you follow me on Twitter, you can understand that the levels that I put into the market are generally, very, very sound. Then we can talk about any kind of other things that people want to know from a fundamental standpoint, and then if we see a good opportunity, we're going to trade. Obviously, these are always open trading sessions, guys, so anything you want to ask at any point, put that through in the chat window or the Q&A window. You can ask me anything you want to do with trading. It doesn't necessarily have to be about the main topic. It doesn't have to be about the data. It can be about anything. Again, I'm always here to help and give you the benefit of my experience, guys. So here we've got the markets, how we're trading today. So a little bit of a recovery in the stocks, I would say. The stocks really have not been in focus, I guess, over the last kind of 2 or 3 weeks of trading. So you can see the S&P really rejected the highs up here when they had a quite unusual day, and the markets had that really initial kind of, the stock went off and they spiked to try and find some value up here. But really the market didn't take to it, and then from really what we saw from that point onwards, the markets really kind of just moved down and broke through this trend channel, which worked out quite nicely on the hourlies. We saw the market really try to push below it and find some good support and resistance battles here. The market couldn't recover back into this channel, so when it came down, this channel became from support, became resistance, and the market moved down. So we've really been ranging down to the low that I actually called yesterday, at 163.788. I tweeted that when we were trading about here, that would be the low. So again, guys, these levels, nobody else will have these levels in because nobody else charts like I do. So this is a 50% Fibonacci level from a previous Fibonacci that I have automatically drawn on the presets of Bollinger Band and moving day crosses. So nobody else had that level in. Well, I don't think they did anyway. So I called the bottom of the market for everybody to see. And again, you're not going to make huge amounts of money after the market recovered. And again, it's a good amount of distance to kind of trade back and to get that good entry point. So again, it's all about understanding why the market moves and where it's going to go from historical data. So we've hit the lows, we've found good support. The market now is trying its best to break up higher. We've already rejected a close above the upper Bollinger Band, and you expect the market to get higher, get towards 1660.88 in this trend line up here. But if it rejects, then maybe it's going to get back to the moving average and retest these lows at 1645 and 1637. So we'll focus on the euro dollar for the kind of first 5 or 10 minutes before the data comes out. So we can see that the euro dollar has kind of rejected the high, so it's tying again with the Bollinger Band. The reason why we've got Fibonacci drawn in here is, again, it's the way I draw Fibonacci retracements in is to do with a certain preset of how the candles on the hourly charts react. So if we get a close above the the upper end of the Bollinger Band, and then the next hourly candle prints a higher high. We do a Fibonacci retracement on that combination, and for me, I've found over the years that's really a sound way of crossing the Fibonacci and crossing the Bollinger Bands to try and find the extremes of the market and where it's going to snap back to fair value. So we see the market really from this point, as soon as it rejects these highs up here in this double top where the top of the Fibonacci is drawn, the next candle's a solid red, and where does it eye up? 50%, gets down to the 66, so then the 50% becomes, in the market, a key level of interest. Okay, so the market dips back down, can't close below the 100%, so where does it look to hit? Well, it comes all the way back up to the 50%, but look how the market reacts around the 50%, how these candles close. And then again, when the market finally breaks through, the market comes back, and the first point it tests, or it looks to test, is the 50%, then the 38, and it just moves higher from that. So, interesting how Fibonacci kind of has its hand in the market at all times. And it's not something you should necessarily use for your entry or exit point, I wouldn't find. It's just to give you an idea of how the market's going to move and how it's going to behave. So again, we're trading right back down now to that 50% level. Okay, so we've got hours and hours of trading, but this level is still very prevalent in the market. So if we close above this, yeah, then the market again is going to look to hit the highs and get through to these psychological levels at 1300. If it closes below it, then we've got lots of key levels of where the market wants to hit. So again, the 100% Fibonacci, all these levels down here at 1.29, 1.28 would be the 1.6, 1.8 Fibonacci, and all the way down here to the 261 overextension at 1.28576. So really, we're going to have to see how the market reacts in the short term to this data. Now, the kind of fundamentals that I've been talking about over the last 2 or 3 weeks, and again, you'll only know this if you pay attention to what I've been saying in the press and to my Twitter feed. And I was having a big kind of discussion with one of the journalists at Reuters that I speak to quite often, and he concentrates on European equities. And what I was saying is that my kind of view is that really the Fed is the leader. The Fed has got it right to a certain extent. You know, if you believe in their policies or not, it doesn't really make any difference. But the S&P and the Dow are almost justified by making these higher highs. Because the stimulus has been there, there's one unified country, there's one unified policy. Now remember, the US's primary currency is the dollar, but they just print it, they just use it. They don't have as many reserves as you might think. People like Japan, China, Sweden, okay, places like this have huge reserves in dollars. So it's not in anybody's interest for the dollar to weaken. Therefore, you know, the share prices and the main indices are going to remain strong. So what I see happening in the coming months is a bit of divergence happening, that the strength remains in the US equities, and we start to, you know, again grind higher and test these highs. But then the European markets are really going to see probably some profit taking, and the market's really kind of drifting down. So every time the markets spike in the US, the European stocks won't follow suit. Now, when I say the European stocks, I'm talking about the DAX, the CAC, the Euro stocks. Okay, I'm not really talking about the FTSE. FTSE's out there on its own at the minute for me, okay? Because we're a very small island in the UK. We're still relatively prosperous. I know we've had the growth forecast revised down, but is anybody actually paying any attention to that? Okay, we know times are tough. We know they're going to remain tough. So growth forecast is going to be, you know, 1% or less than that. It doesn't really make, the figures are absolutely irrelevant, to be honest. You know, day to day we understand that, you know, times are going to be tough and that the employment situation is tricky, but when you look at other countries, we're not doing too bad. We haven't got the unemployment rates that Spain and Portugal have, and, you know, again, we're still going to, like it or lump it, you know, the benefit system is still fairly accommodative, so people really still can remain and keep some standard of living. You know, that kind of stuff just does not exist in places like Spain and Portugal. Then again, we see worrying figures coming out of places like Sweden, that, you know, you don't really see them on the radar that much because they keep themselves to themselves. You know, they have a good tax system. You know, they're very, you know, strong economic wise, but their unemployment again is reaching higher. So for me, I just don't know what's going to happen to the euro, to be honest. I just can't see it ending well. Now, it's in no one's interest, you know, any central bank, any country's interest for the euro to fail, but long term, what really is the future of the euro? I don't know. I just can't see it being around in its present form for the rest of my lifetime. I just cannot see that. So what my strategies and my fundamentals are all really kind of building around is that I want to see the US and the dollar and the indices continue to strengthen, and for people to see that the US is still the biggest consuming nation on earth and it's going to drive the global economy. And then I want to see a bit of weakness, not weakness per se, a bit more reality come through to Europe. Now the reason why the indices are testing these highs is a ripple through the US, but to be honest, you know what, it just, yeah, well, I mean, everyone's got entitled to their own opinions. Okay, mine just is that I don't want to see the euro fail. I don't want to see the eurozone fail. I just want to see a bit more reality in the stock prices, a bit more of consistency. You know, we're trading way above, you know, current value. I just don't see why the market's this high. A lot of it's being pushed up by the governments themselves. You know, that they're investing into equities. So when they do liquidate, you know, again, the market's it looks like it's going to be a huge correction, but it's not. It's just going to be profit taking because, you know, that's just the way the governments work and that's just the way the markets work, unfortunately. Okay, Mr. C is just saying, if no euro, everybody with dollars, what will we trade? Yeah, absolutely. Absolutely. I mean, again, when you say the euro won't exist, it's not just going to disappear out of circulation, is it? The euro will be split into probably two currencies, so like a north and south euro. That's the most sensible thing to happen. I'm not saying it will happen. I've been known to be wrong. It's just, to be honest, I've lived abroad. I've lived in Spain for 8 years, so I know Spain. You know, I know it very well. I own property in Portugal, so I go there a lot to play golf. You know, I'm not just saying these things from an economic standpoint. I'm saying it for somebody who's lived in these countries. You know, there's a lot. You know, property prices in Spain, for instance, have gone up nearly 3,000% in the last 10 years. You know, if something that goes up that high and that quick, you know, the harder it rises, the quicker it rises, the quicker it's going to snap back and fall down. That's just simple. You know, we've just seen that. You know, the same thing will happen in gold. Okay, we've seen it on a steady, you know, 3-4 year bullish momentum. When the market starts to get away from them highs, they start to come down. So, you know, these things, you know, are there for everybody to see, and it's down to you guys how you figure out your own strategies and your own views on the market, because that will give you the extra confidence, and that will give you the ability to build up a picture of what's happening in the currencies and the indices and tie them all together. Okay, so we're seeing the euro dollar now. That 50% level really has been broken. So we're on the hourly candle, so an hourly close below that, depending on what the data comes, and you're going to see the market really test these lows down here. And expect the market really to kind of test 1.29, 396, and then maybe have a little bit of a bounce before it continues downwards. Because remember, you know, people will be taking profit. We've seen 3 red solid candles, and you just have to look at what's happened in the past. Okay, so every time you see a number of red candles, you will see a retracement. So again, not to harp on about Fibonacci, but where would you know Fibonacci from? You know, the high to the low, so you'd expect it to bounce at some point, okay, and to retrace back up to maybe the 23.6, which ties in with that level there at 1.2971, before then finding that as resistance and moving back down. So you could use the charts and Fibonacci however you want. It's entirely up to you. But I just find it's a good tool to focus around that 50%, especially of big sharp moves, because it's just a natural way for the market to find value without looking at any other really kind of matching up indicators. So we've got about 15 minutes or so till the data. Is anything anybody wants to particularly focus on? I mean, my view on the euro versus the dollar is really still negative. We've rejected the psychological level a number of times now, the 1300. So I think realistically, if you go from the higher time frames, okay, so it gets messy. Okay, we always know that's going to happen, a lot of levels, but this is where the trading action is, all these lines here. Okay, so really you can see that the market is coming together in this very, very strong triangle pattern. Okay, so we're going to expect the market really to range to get tighter, and it's going to have to make a decision point on the monthlies if it's going to break down to maybe 1.2, which I think is most likely to happen, and below that all the way down here to 1.10690, or if it's going to recover, break the 13000 technical level, break it up here, and then make new highs and get to 1.6. It's going to do one of them two things, but it's how we trade it. So the monthly, really, we've been quite bullish but the market really now is consolidating. So we're in a bit of a sideways trend. So we're not looking for a particular break up and down until maybe, you know, further on in the year in the monthlies. So really, from the monthly perspective, the highest time frame we've got, but we're looking at it sideways. Okay, there's no real momentum upwards or downwards in the market for me from that view. Weeklies, okay, slightly different story. The market again on the weeklies is much more of a downward trend. So the market has rejected the highs, come all the way down to key support, and we're kind of moving again in a sideways manner, but slightly more bullish this time. Okay, so we've gone from a sideways view in the monthly to more of a tinge of positivity on the weeklies. Get to the dailies. Well, that again is in the middle of the road. The market's rejected, sold all the way down. It's retraced back up. I guarantee this will be near enough 50%. Okay, from the high here to the low here. Yeah, well, there we go. The highs are pretty much 50%. So the market's taken that into consideration, hasn't held on to it and come down. So really, for the dailies, that's more bearish for me. Okay, so we've gone from sideways to slightly bullish on the weeklies to the daily view being fairly bearish. That the 50% has been taken into the market, so it was going to retrace these previous losses. It would have done it by now. So the market's now moving downwards. We can see a lot on the dailies. Okay, a lot of wicks, big wicks. Small bodies indicating the highs can't be held onto. So for me, the market is looking to move down. So okay, so we've gone from sideways, slightly bullish, to bearish. Okay, so look on the hourlies where we're trying to pick our trade, and now we know where we are. Okay, well we know that we're bearish on the dailies. Okay, there's not enough momentum, I don't think, from the fundamentals for people to start rushing into the euro. So really, we would look to get short around this 50% level, yeah, on the hourly charts. We might see a bit of pullback and profit taking back to these levels here, but is there going to be enough momentum to push the market back up to here? No, I don't think so. So we'll get a short position between here and here, in my opinion, then look for these lower levels to be tested, the 100, these low levels down here at 1.29 and 1.28. So that's how you build your views up, and that's higher time frame trading, okay, on smaller time frames. So all these dotted lines, okay, the dotted lines are hourlies, okay, but all the other coloured lines are all daily, weekly and monthly levels of interest. Okay, so they're just the things you've seen on the monthly, but with all the clutter taken out. So it can look a little bit messy sometimes, okay, and people do say that. But, you know, if you bring up a normal chart on MetaTrader, okay, that's what it looks like. So how do you know, how do you get any semblance of what the market's trying to tell you from that view? Well, what you do is you overlay these templates, and all of a sudden it looks a lot clearer, okay, that the market's rejected these daily levels here, okay, 3 times, 3 daily levels, so the market wants to move lower. Well, where's it going to go to? These other levels on the downside that are key supports, you know, key support daily, okay? So you need to have your charts built up in this way to understand where the market's trading in relevance. So this is an hourly view, and we can see the market's gapped. So okay, this is just the euro, the dollar, sorry, versus the Swiss. So if the market breaks these highs here, there's nothing. There's no resistance, nothing to stop it on the higher time frames to get to 0.9769. Okay, there's nothing there. There's nothing else of interest in the market. You know, people say, oh, well, maybe the tops here will be of interest. No, they won't. Why would they be of interest? They're not of interest to anything. Okay, the only thing that's interesting in the market is it finding value. So again, how do you beef that chart up a bit? Well, put some indicators in. Put your Bollinger Bands on. Okay, 20 period, 2 standard deviation, 2 your hourlies. Okay, so what's the market going to tell you here? We're right towards the top of the Bollinger Bands here, so it's going to have to close out to the Bollinger Band. We know that generally the market then makes a higher high in the next one, so the market's either going to have to really kind of extend aggressively or react to this fundamental data that's coming out shortly, you know, to move that, you know, 119 ticks. If it doesn't, yeah, then you find a point to go short, yeah, and then the market's going to retest these low levels down here. So the markets can only do, you know, we can all understand and logically make arguments for where the market can go. But that's not the art of trading. The art of trading is putting that into an opinion, putting that into the right entry point and trying to make some money of it. Okay, so any other questions, anything else you'd like to ask? So we've just got Gabriel asking, can we look at the euro versus the pound, a choppy market? Absolutely. Okay, so we've got the euro versus the pound. So again, euro versus the pound here. As you can see, choppy market, standard MetaTrader chart. Put some levels on, put some Bollinger Bands on, and let's see what the chart's telling us. Okay, so again, start on the monthlies, highest time frame. So what's this particular story telling us? Low volatility, low volume, market then starts on an upward bias, and then bang, the market really does aggressively move up. So if you want to find out where we're trading in value, then you can do this in different ways. You can take you from the start of the up move here to the highs, yeah, and that tells you the market really has got as low as the 50% and then broke lower, but then couldn't really close significantly below the 61%, found support on the 50% and moved higher, so it's rejected that, so the market really is ranging. That Fibonacci doesn't really tell us anything from that point, to be honest. So if you want to do a Fibonacci of this bigger move, you can see the market really rejects moving back into this previous up move here, so that's key support. So you do key support to the highs that made here. That tells a bit more of an accurate story. Again, look, the market is rejected twice, closing above the 50% of this up move, so the market really looks like it's running out of momentum. Okay, failed to make a higher high, failed to make a higher high, failed to make a higher high, almost a double top, rejecting a close above the 50% of this move here. Okay, so the market really looks like it's going to reject these highs here, then it's going to drift down, and then you've obviously got your target of the low of where we started, this key point of support here at 077531, or really to see if the market reacts and closes below the 61.8, which is at 0.85577. So really, I would say from this point, if we don't try and get back to that 50%, I'd say that the euro is going to really weaken against the pound. And again, I'm still fairly bearish the euro, as you know from my fundamental chat earlier on. So we'll have to see. But remember, that's monthly. Okay, so these are significant levels. If you look weekly, how that pans out, we're trading right on that 61%. Okay, so really the market's rejected this up move here, and again a lot of wicks, a lot of red, not too much green to kind of give us any confidence. Dailies, well, I mean, dailies are screaming out. Rejection, rejection, rejection of moving above this key level up here at 0.86021. So the market for me wants to move down. So it wants to get down here, so we've got a point movement once it breaks these lows here. So that's key levels of interest here on the dailies at 0.8513. The market wants to push and test these lows, and then again it's going to come down into the range. So looking at your hourlies, picture becomes a lot clearer, doesn't it? Okay, look at the rejection of these levels up here. Market just can't hold on to the tops, so really we've rejected on the hourlies a close above the Bollinger Band, another hourly close above the Bollinger Band. We're inside, found some support on the moving average, so really you want the market to make a low from this point, test the low end here of the moving average, and you've got a clear target here, the 61.8. Now remember, that 61.8 is a monthly 61.8 Fibonacci move, so already the monthly Fibonacci level is having play on today's trading. I mean, look how it's been support. That's a monthly level, guys. Look how strong it is, how many times it's tested, and that's just taken from a monthly chart. So if you're currently short, John, then you're going to have to really. Oh, so you short the DAX. Okay, we'll go back to that in 1 second. Okay, so again, obviously, these monthly levels are going to come into play. So if we hit and close below the 61.8, look how many times it's tested. That's going to be pushing longs out of the market, and it's going to really kind of break to the lows. Okay. So let's go back to the overview because we've only really got 7 minutes for the figure. So that's them charts taken care of. So somebody's just asking all about the Aussie Euro Aussie dollar. Okay, well, I'm not too sure about the Aussie dollar for the euro, but we've got the Aussie dollar here against the US dollar. That's been in a bearish momentum for quite some time. So we've got some key levels coming up here, and really I can't see the market supporting these lower levels. So the market wants to hit 0.95. So really, I'd be very bullish anything that's dollar based, to be honest. So still bullish on the short term commodities, even though I've said gold's going to hit $1,000 by 2015, but still, people are going to be buying things in dollars, and still very wary anything else. to be honest. So I still see downward movement in that. John's just asking, have you seen the DAX today? Yeah, I've seen the DAX. Let's go back to our majors. Okay, so the DAX again. I mean, the DAX it's just been a nightmare to trade. It's very, very difficult. But you look at the dailies, it's found key support on the 20-period moving average. Okay, so again, it wants to retest these highs. Again, I mean, it's not really reacting the same as you know, the SMI and other kind of correlating indicators. I don't know where the strength is coming from. The only thing I can think is that the market is being bought up by you know, the central banks. So we found support on the moving average. Where's the DAX going to stop? Well, it's not really going to stop, is it, until it hits 8476. You know, that's the dailies. That's where it's going to look. And again, I fail to see it making a high above here, but it's going to keep pushing the shorts out of the market, keep pushing it up, you know, higher, and then again it'll do the same thing. It'll dip back down. You know, I don't really know why it's doing it. I've chose to stay out. I mean, I had a heavy loss at this point here in the DAX. Okay, stops went off, and I lost £12,500 by the time it hit here because stops were allocated to my trade, and then the market gaps and goes all the way down here, you know, 4 points. So it would have been a 30 grand winner. But what can I do? You know, stops allocated to the trade. I should have known that. You know, 150 point stop went off, and I had to take that loss. You know, a big boy, you carry on. But am I going to continue selling the DAX and make the same mistake? No way. I'm not going to sell the DAX until it's rejected these levels up here once and for all, and then closes significantly below 8408. So if you short the DAX, the only advice I can give is you're gonna take pain, but you're gonna have to stick with it, because as quick as it goes up, the quicker it will come down. Okay, so the S&P again, the S&P is ranging, but we find support again on the 20-period moving average 4 times now. So for me, that's a green light for the market to test these highs up here, and it's going to make higher highs to 1685. You guarantee it. So keep buying the dips where you find value in Europe while you still can. But for the US, green light. Keep buying it. It's as simple as that. Alright guys, well, let's go into the default screen now for this excuse me, this trading session. We've got this data coming out now from the US. We've got the quarter-on-quarter US GDP expected at 2.5 today, with a low at 2.2 and a high of 2.9. We've got the jobless claims expected 340, bit of a tight range on that. So obviously higher the jobless claims, negative that is for the S&P. GDP is the same scenario. The better GDP is, the better it will be for stocks. So we've got the euro dollar up here, because that's what we're going to focus on. So obviously higher figures are going to send the euro dollar down, whereas it's going to send the S&P up. So we've got 2 correlating indicators here. We've got gold just as a bit of an interest trade, to be honest. I don't think gold's going to react too much in these figures, but you never know. So if you want to trade US data now, then we're going to trade it based upon what's going to come out. Now, I'm going to keep an eye out for the jobless claims, because the markets have moved on this, but for me, the GDP is a much more significant figure at 2.5, and it being a quarter-on-quarter. So what I've got to do, I've got the squawk on in the background. So I've got my trading screen open as well. I've got the S&P and the euro dollar. So what I'm going to trade the S&P off the back of this GDP figure. So expected 2.5. So I'm going to say buy, or sell. Now that's not an instruction for you guys to buy or sell. That's just me telling you my initial reaction to the data. Now we get filled on the initial trade, that's fine. If we don't, what we'll do is we'll switch onto the smaller time frames and we'll trade a 5-minute reversal or continuation pattern. Okay, so something a bit different. If you haven't seen my trading sessions before, then this will be new to you. I've traded 27 consecutive non-farm payrolls, haven't lost one. We have attendances of 150 people, so these are good examples. Now the US GDP is not really kind of as strong a figure as non-farm payrolls, but it's definitely worth keeping an eye out for. Alright guys, so again, figure expected 2.5 GDP. The call will be buy, sell. I'll be doing that in the S&P. That is the middle chart on my screens. And just listen and watch guys, enjoy. So key levels in the S&P, right up here, the highs are 1685 and the lows down here, so they're not going to be hit. So let's just wait for the data and see what happens. Okay, About 30 seconds to go, guys. Okay. 2.4%. So the GDP is slightly lower than expected at 2.4%. Listen for the jobless. 354,000, so a little bit higher. So net, that's a little bit worse information for the S&P though. Okay, we've got jobless claims higher than expected, but only marginally, and the GDP slightly lower than expected. So you're going to have to see what happens in the S&P here. Okay, so we need a 15-minute chart. So in the small time frames, you'd expect the market and the S&P to test these lows here. And if it does, then it's going to go back into the range and support down to 1467. But do you know what? I don't think that data is bad enough to sell. You have to be very, very wary when trading US data and US markets when bad news comes in, because the traders and the sentiment at the minute is all about dip buying. So I would expect the market to try briefly and test these lows, okay, because it is technically slightly worse information for the markets and slightly weaker figures than expected. But we're only 0.1% out on the quarter-on-quarter, and we're only 15,000 jobless claims above the Bloomberg estimate. So nothing really is going to send shockwaves through the market. So what I would suspect, if the market did dip below these kind of levels and come back into the range, it's going to get bought up. So again, on that slightly worse than expected data from the US, we can see that the euro is taking a bid against the dollar. So again, what's that going to do? I mean, the overall direction of the euro against the dollar in the previous hours of trading has been fairly bullish. So you'd expect these levels to be hit. So the market is going to extend. Okay, it's going to find value at these levels here. So maybe 1.29658 is a good level, okay, to buy, because again, that's positive news in the respect that the euro should gain a little bit of traction from worse data out of the US. But it's such a difficult call to make. Okay, the S&P is not reacting at all. Okay, we haven't seen anything. It hasn't tried to go bid. It hasn't tried to go offered. It doesn't want to come back into the range. It doesn't want to hit higher highs. Okay, gold hasn't really done anything, again, because it is, for all intents and purposes, an inline figure. So you've got two decisions to make. If the euro dollar had a little initial bit of a bid go into it, so are you going to find value down here? Okay, at 1.29658 or 1.29529. Okay, that's the decision you have to make. I think the S&P now is taking a little bit of a slight bid, again, because as I said, any kind of inline data is good for the US, and they don't want to sell. They just don't want to sell the S&P. They don't want to. You know, I don't understand why it's up there, but I couldn't justify selling into that figure. So what is it going to do now? Well, it's going to go bid, and it's going to take out these tops here and take all the shorts out of the market. So again, that's a 15-minute candle. If you look on your hourlies, okay, we haven't really got any levels until these new highs here. So the market's going to push any shorts now out of the market, okay, even though that is slightly worse than expected data, and then push up. So what's that going to do to the euro dollar? Okay, so the euro dollar really should be taking that bid, but if the S&P continues to strengthen on the back of that inline to slightly weak data, then maybe we're going to see the market break 1.29529 and then come all the way down to 1.29300. So the whole point you have to think about with this data is, okay, that data's in the market now. So if there was going to be any big move or any big reaction, it would have happened by now. Okay, so that 3 minutes is enough for the majority of the market to size that up and see if there's an initial opportunity to make money for buying or selling it. So what you're going to have to think now is, how are people caught on the wrong side of that? Okay, so if people were expecting these to be tops in the S&P, okay, all the shorts that were relying on, you know, a weaker GDP and a much worse than expected jobless are all having to get out of the positions now. So that will send the market, like the S&P, up, and then again you're going to get people pushing the market up in order to squeeze it. So in the euro dollar, you're going to have to make up your mind what's going to have the biggest move. Okay, so I don't really like that screen. I don't know why I put it on. Let's go back to where I'm more comfortable. I'm more comfortable here. Okay, it looks messy maybe to some people, but I understand what's happening here. So the S&P's got a clear and defined level it wants to hit. Okay, it wants to hit this trend line up here. Okay, it wants to hit 1660.88. Okay, that ties in with the 50% Fibonacci. It ties in with the trend level. It just wants to do that. Okay, so that is going to strengthen. So that for me is going to push the euro dollar down. Okay, so even though the euro dollar has had a little bit of a bid going into it now, okay, that just means I want to sell it. Okay, because I'm going to take a lead off the S&P. I'm going to have a lead that there's going to be a little bit of dollar strength come back into the markets. So what I'm going to do is I'm going to wait for the market to hit here. Okay, so again, obviously that is worse than expected data for the US, but the US is paying no attention to it at all. So in theory, you'd expect the euro to strengthen. Okay, on that data, but I don't want to buy it. I do not want to buy the euro on that data. I just don't think the euro is strong enough. So what I'm going to do instead is I'm going to wait for it to hit these higher levels and sell. Now I could take an aggressive position here at 1.29683, okay, and average in. But what I'm going to do now is I'm going to wait for it to hit here at 129.740 and 129.780, okay, and then I'm going to short it. And if it doesn't, and it starts to, again, aggressively move down, then, we've missed an opportunity. But, again, all that market data has been absorbed, all them views have been taken on board, and the market is going to have to make a decision for the rest of the trading day if it's going to continue to be bullish or bearish. So for me, as I said, I'm going to take my lead off the S&P. I just can't see the S&P not making highs from here. I just can't. I'd love to say it wouldn't, but the US is just so strong, and it doesn't matter what the economy, or what analysts throw at it. It just wants to keep making highs for now. So that's what I'm going to keep doing. I'm going to keep buying dips in the American markets. I'm going to stay away from the European markets, as I said, for now, because as John rightly pointed out, it's dangerous, and the DAX is brutal. It's brutally difficult to trade at the minute, and even with me with deep pockets and 10 years of experience, I had to take a big loss on the chin, even when I was right. But that's just trading. You can't cry about it. So really, gold, again, another key level I've got here at 139960 that I've tweeted many a times. Market found support and it's going to hit higher. It wants to hit 141.81, but again, I won't be buying gold. I'll be shorting it at these levels. So really, it's all about getting involved in the euro versus the dollar. For me, I'm going to go short. Okay, so I've sold the euro dollar now, just a sold at market. Okay. I expect it to blip a little bit higher and to get to 129.78. That's fine. I'm just going to keep selling some more at that. And I expect the market to close below this level on the hourlies. And realistically, for me, I can see the euro versus the dollar trading at 1.29396 within the next kind of 2-3 hours of trading. Okay, so don't think that data is going to shake the US too much. I think people are going to be buying into the euro with false hope. Okay, so as it goes up, that's fine. Yeah, I don't expect it to get anywhere near these highs here, and this technical level at 1.3000 on the back of that data. So I'm happy to short into everybody who's buying it because I think they're wrong. Okay, so the market is going to test up here, probably to 139.78. If it breaks above that, again, we've got a clear target of where it wants to go to. But if it breaks above, I've got two options: I hold it or I get out. I don't think we're going to close above this level here at 129.780. I just don't think that data is enough to make the markets do that. I don't think there's enough strength left in the euro to do that. Okay, but that's just my opinion. I've only taken a small position. Okay, so nothing major. I'm quite easily average into a much larger position if I think the market is being manipulated. John's asking what's the red line on my chart. Well, the red line is the top of the Fibonacci. Okay, so that's the top of the Fibonacci, which has been drawn to here. So that's red because that's a good indication of where the market will sell. So the market again's blipping around. Again, it's just trying to test this 129.8878 again, these highs. But that's fine. I can keep doing that. That's an hourly candle. I won't get out of this trade for at least 21 minutes because I'll wait for this hourly to close. And if it closes below this level here, then the market's only going to drift down. It's only going to hit 193.96. It's only going to move down. So, again, take a screen print, guys. Take a screen print now, press print screen, paste it into a Word document, paste it into a Paint document. Okay, from that data that's come out, my view, the S&P is only going to grind higher today. The euro just I find fundamentally weak at the minute. I don't think it's going to get to these highs, and on all them basis, okay, all them arguments, I have shorted into a market which seems to be very strong and going up. So again, it's not counter trend trading. It's not me trying to prove I'm a better trader than anybody else. That's just my analysis, my charting, my thinking that if the market struggles to close above this level here and test these highs and this psychological level at 1.3000, it's only going to drift lower today. So it's going to drift lower to the moving average, and if we're lucky, it's going to hit the lower end of the Bollinger Band and get down to 1.29254. Okay, so again, we're not looking for a massive trade here. The stop would be up here somewhere, 16 ticks, but if it comes down, we've really got a profit target of 51 ticks on this trade. Okay, so we start to break below the red line, top of the Fibonacci where it's been drawn. Again, I'll aggressively sell some more. But right now, we've just gone into profit. The market's looking to me like it's rejecting them highs. No one's going to be buying the euro that aggressively off that bad or seemingly bad US data. So I'm happy to go short into a strengthening market. So that's how you build it up. Okay, so Forex Gal was just asking, how long do you trade in the US session? Well, it depends. It depends how long I want to hold a trade for. I mean, I generally trade off the hourly candles, so I'll be holding this trade for at least 20 minutes. If it starts to go on in favour and we start closing above all these levels, below these levels I've got in, then I'll hold it. Again, I mean, you can trade however you want, guys, again, but if you wanted to get the full extent of moves, then you have to be trading off your hourly candles. I mean, these are things that I've been saying in these sessions for literally years. You're not going to make the money trading off a spread betting platform that people can make with direct market access. So you have to hold your trades for at least an hour. And again, it's, a lot can happen in this candle in the next 20 minutes. You can go up to here, you can go to here, but you have to look where it closes. If it closes below this line, look, there's just a gap. There's a gap of nobody wanting to buy it here. Okay, so if it closes below this level here, it only wants to move down. Okay, so then use your Bollinger Bands, use your moving average as the first point of target, then use the lows, and then put it into the context of the rest of the market. Okay, so the S&P, okay, it's going to have to come down, but again, it's made a double top here, so if that drifts down, then maybe we're wrong. Maybe some strength will come back into the euro. But again, the euro versus the pound, again, similar situation, rejected levels up here, rejected these highs. So look again, we've rejected the close above the 50%. The market's hit the 100% already, so it's going to range down. And for me, we're not making higher highs. So the market wants to get back down to these levels here at 0.855, 0.85534, and 0.5460. So for me, I'm happy to stay short the euro against the pound, the euro against the dollar. I just don't see people aggressively coming in to buy it. And I certainly don't think that US data coming in a little bit worse than expected is going to make people rush out into the markets and start betting the farm on the euro. Not a chance. So gold's making a bit of a bid. Again, I've told you 141.81 is a key level for me. But again, I wouldn't be buying it up until there. I'll be selling gold at that point. And that's the view of the markets, guys. So we're taking a short position on the back of good data. Okay, the euro's again trying to push up, but again we'll have to wait for that candle to close. We've got 17 minutes. So if we close below that level here at 1.29780 on the hourlies, that will come down. It's that simple. Okay? Is that clear enough, guys? Is that clear enough for what you wanted to know? Okay, Dr. Christian saying you took money from the dollar versus the Japanese yen on the news, right? Excellent. Well, that's good. That's great trading. Is there anything else we want to kind of go through while we've just got the charts open? We haven't really got a great deal of time, but what are your views, guys? Are you still bullish the European stocks? Do you still think there's hope for the euro? Do you still think there's value to buying that euro above 1.3000 and it's going to get back to the highs at 1.6? Okay, so the pound against the dollar views. Well, I mean, the pound against the dollar is a difficult one because I still see strength in the UK and I still see strength in the US. So really, it's just, to be honest, my view of the pound versus the dollar is stay away from it. I've got conflicting fundamentals. I've got conflicting, views on on what the market will do. So to be honest, my advice is to stay away from that. So like your short overall fundamentals view. Alright, Don, well, excellent, brilliant, no problem. So the pound in general, to be honest, I'm just staying away, okay? I understand my view in Europe, and I understand my view in the US. My view of the UK, it's out there on its own, isn't it? I mean, we've had some downgrades, but as we keep saying, the downgrades haven't really affected people's lives a great deal. So my only view would be to wait for Mark Carney to come in as Governor of the Bank of England and see what he does. Until that point, I'm staying well clear of the pound in general. I'm staying well clear of trading the FTSE. And that's it. There's enough markets to trade outside of that. So my view is buy the dips in the stocks. So be getting long the stocks anywhere above 1,650 in the S&P, that is. Stay bullish the dollar. Sell short term. Again, I think we're going to see some strength in oil, and again, obviously that's priced in dollars. But really, be careful of trading gold, because I still see that coming down in the short to medium term. But that's my views, really. Forex Girl, what about the 10-year notes, bonds, US, go with the dollar? You're going to have to, aren't you? I mean, again, I'd stay well clear of the bund, because you just don't know. You know, Germany's acting like it's the powerhouse of Europe, and it's acting like it can take on the world. But the ECB is not the Fed, so I'd be staying well clear. I'm just going to sell some more in that euro dollar, because that's just getting to that level up there. So I've just averaged some more into that euro dollar. So again, I'm still going to wait 14 minutes before it to close above it. Don't think it's going to. So I'm happy to take some more shorts and some more better prices up the top. So yeah, I mean, in answer to your question, Forex Gal, stick with the T-note, because if the US government can't pay its dividends and yields, then the world's finished anyway. So what does it matter? The world will be ruled by China. So who wants to live in a world like that? Not me. Okay, guys. So any final comments? Anything else that you want to just ask? Great to see the usual faces. Great to see Forex Gal, Pan on Fire, Dr. Christian. John, of course, always great to see you. Great to see some new faces as well. Always nice to see people. Again, do look out for my live non-farm payroll session that's coming up. It's not difficult to find. Just Google Steve Ruffley. You can find me. Follow me on Twitter as well, guys. That's the best way to get me, at Steve Ruffley. Okay, so the euro's taking a bit of a bid now. Okay, so it's aggressively trying to hit them highs up here. So you have to think. Again, 13 minutes until this hourly candle closes, so how far can it push the market? We're still going to wait for the close, remember? So again, I don't see this market staying up here anyway, so I'm quite happy to stay short. And if I want to, I can still manoeuvre and negatively average into them highs a little bit more. Remember, we're trading off the hourly candle, so I might hold that trade for the next 2 or 3 hours. But I mean, again, all the key trade is waiting for it to close. And see where it closes in relation to this level here. Okay, and I know the target is the fundamental level at 1.3000. Are we strong enough? Are we really going to break these 4 or 5 levels here that are close together on the back of that US data? I can't see it, but you never know, guys. I've been wrong before. That's it, John. I love it. If in trouble, double. Go on, sell some more. Yeah, I will be selling some more, John. You know me. I'm absolutely I'm fearless when it comes to selling highs, and again, sometimes it's cost me money, but I'm the one sat here in the tax haven, and I'll do all right for myself. I'm not worried. 6 lots in the euro dollar isn't frightening me. I can take that up to a good 500-600 lots if I want, no problem at all. But let's keep calm. It's not like get emotions involved in this. Let's see where the hourly candle closes. And if we're wrong, get out. I'm not going to turn this into a bloodbath. It's just my view. I'm trading off the back of my general fundamentals and trading off the back of that US data. Okay, so remember, dip buying in the S&P. That might drift down to the moving average here, but I'll be buying into that all day long. So the euro is looking strong now, but again, we've got a lot of resistance up here, all the way up to this 1.3000 technical level. And if it breaks through, hey, maybe we'll see one of these massive spikes. But yeah, I'm not particularly interested in worrying about that too much. But we'll have to see, guys, won't we? Absolutely, Dr. Christian. Well, let's what will amaze a lot of people is you'll see this now. People saying, "Well, how can you possibly stay short? It's going to go to the moon. It's going to hit." But in 11 minutes' time, that candle could have closed down here, and everyone's like, "Oh, right, okay, well, yeah, of course it wasn't going to break that psychological level. Of course it wasn't going to do that on the key level." But when you're in a trade, you're in a trade. That's what separates the men from the boys, doesn't it? Everything's easy in hindsight, and everything's easy when it's going your way. When it's not going your way, you have to still stick to your reasons, and the reasons are fundamental, the reasons are technical, and the reasons is I've got 10 minutes until this candle closes. So I might be getting every short out of the market from here to kingdom come, and then by no time at all, in the next few hours of trading, we're trading way down here. Okay? Yeah, S&P, indecision candle, but again, that's the hourlies. So, let it... you have to wait. Still dip buying. Again, there's still a lot more green action happening than there is red action. Okay, and I still know where the S&P wants to go. It wants to hit this trend line up here. So, again, it might drift off on the short term, but really, nah, I'm not having that. Okay, so we've got 10 minutes before that candle closes. I've shorted some more in because I don't think the market has the strength to break that technical level and that psychological level here. So I've gone short some more in just to appease John. But then we're going to be patient. Absolutely, be patient, like Forex Girl said. You guys, you're definitely coming up with some absolute classic trading kind of analogies here. We've got 10 minutes, 9 minutes for that candle to close, but that's an eternity in trading. But I mean, that picture in 9 minutes could look very, very different than it looks now. But like I said, I'm not fussed. We're still only 12 lots in. We've still got plenty of room to manoeuvre. I still think, that's a very strong one candle. We've retraced pretty much the 2 hours of previous selling action. Okay, so the market is going to find plenty of sellers up here. So again, let it drift down. If we close below it on the hourly candle now, after having made these attempts to break up higher here, that's even more bearish for me. So I'll be selling even more at this level here at 129780. But again, guys, I'll have to monitor it, have to see how it goes. Unfortunately, you won't be able to stay with me because that's pretty much my time on FX Street today. But again, take a screen print. You know my trade. Go at Steve Ruffley on Twitter. If you want to follow me, I'll continue to post what I'm doing. Again, if we have to get out, we have to get out. But we ain't finished yet, guys. We've got a whole 8 minutes before that candle closes, and take a view from there. All right, guys. Well, listen, it's been an absolute pleasure. Great to see some good numbers again on this live trading session. I'll be again. I put my schedule into FX Street, so I'll be here every week again next month. Anything again you want to know, guys? Google Steve Ruffley. I'm not tough to find. Any questions you want answering, I'm always happy to help. Again, guys, brilliant. Thanks to Maud, Vicky, and the guys at FX Street, and I'll see you guys very soon. Have a great afternoon.